warriors come out to play. Warriors.
Yo, 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 what's good, people? It's Crypto and Down, back again on this fine Tuesday evening. Shout out to Jams joining us. I'm Asherel, and we're going to get into some market prices, talk things blockchain, cryptocurrency, and all things digital assets. But appreciate the time that we have with y'all today. We'll try to keep it short and sweet, but I'll pass it over to you, Jams. How are you doing tonight?
Yo, yo, yo. Shout out to all the crypto rascals and crypto warriors out there. A pleasure to be back on again on this Tuesday night, February the 10th, our 100th and something episode in the history of Crypto and Down, season 3, season 4, whatever
Yeah, it
it
was
may be at this point. But it's an honor and a pleasure to be here to talk crypto, to talk some financial markets, just to talk the state of the world as a whole. So, what's up, brother? How are you doing this week?
Man, I've been doing pretty good. Starting off the week pretty busy into a new role officially started. So trying to learn
Congratulations.
as I go. So it's been good, busy, good. I would say overall, and the weather's been like spring. So even though we're still in winter, but that's Texas for you.
That is Texas, and congratulations on the new role. I'm sure you are learning at a rapid pace, but as anything, you will adjust, adapt, and then excel. So, wishing you the best, bro. I know we have many things to get into tonight, so let's get into it, man.
Let's get into it. As you once told me, always forward. I want to start off the show with a clip here. A lot of things going on in the with Scott Bessent talking to. I think he went and talked to Congress. So let's just get a little bit of insight. A lot of fluctuations with the market. I wanted to set the tone by playing this clip. An exchange. There was a lot of exchanges between the Secretary of Treasury and the different members of Congress about a lot of different things, but this one stuck out to me specifically, and I want to get your thoughts on this, Jans, before we move into talking about the prices and what we kind of predict will happen in the future.
Mr. Secretary, we lived through the bailouts of 2008 when powerful men lose money. They now want a government bailout. Does the Treasury Department or the various components of the FMOC have the authority to bail out Bitcoin?
Could you please elaborate? What exactly does bail out Bitcoin
Okay,
mean?
could you
Congressman, that's a
instruct the
very-
banks of this country to buy Bitcoin, or change banking regulations so that they are encouraged to do so in terms of the reserves that they're otherwise required to have?
Again, that within the context of asset diversification within banks, they could hold many assets.
They can, and they're different, but do you have the authority to order banks to buy Bitcoin or to invest U.S. tax dollars in Bitcoin or Trump coin?
I am Secretary of the Treasury. I do not have the authority to do that, and as Chair of FSOC, I do not have that authority.
So we're not going to see our tax dollars invested in crypto assets.
Well, why would a private bank be your tax dollars, Congressman?
Excuse me, I'm now asking about the money of our taxpayers, which you manage as Secretary of the Treasury. Is it going to be deployed into crypto assets?
We are retaining seized Bitcoin.
That's not exactly taxpayer money. You collect a lot of taxes this month.
No, that is an asset of the U.S.
It's an asset of the
It is an
U.S.
asset of
It
the U.S.
was
government. And
are you going to invest
And,
any?
and I will point out,
Mr. Secretary, reclaiming my time, are you going to invest?
the asset seizure, that $1 billion of Bitcoin was seized, $500 million was retained, and that $500 million has become over $15 billion.
Gentleman's time has expired.
There you have it there. Before you get into what you think about it, one thing that stuck out to me was just a awesome exchange there. The dude's pretty unflappable. So a little bit of background on Scott Bessent. He's the Treasury, not Treasury Secretary, he's the Secretary of the Treasury. And his background is he used to work for the fearful, what's his name? What's Joe's missing? So slipping my mind. Soros, George Soros. So back in the day, he got his foot started in, I would say, financial investments, and he was one of the people, along with George Soros, who I guess you could say broke the Bank of England back, I want to maybe say in the 80s or 90s, where basically the framework that George Soros laid out, his framework for how to look at markets, talking about the theory of reflexivity. It's very interesting. I would say anyone go check out George Soros talking about it, because it's very interesting to think about how he approaches markets and how they were able to basically, I think, short the Bank of England when it came to, I guess, bonds. So that's his background. But when he was talking about the seized Bitcoin that the U.S. has, the Bitcoin reserves that the U.S. government has in possession of them, I think something that's very interesting, how people were expecting the Trump administration to have like a strategic Bitcoin reserve, but pretty much what they did was they just renamed the seized Bitcoin that they had the strategic reserve and held on to that. And yeah, it's definitely gone up in price, as Scott Bessent noted. But I think those are two things to be interesting of his background in financial investment banking, and also too kind of his approach to thinking about these digital assets, and particularly Bitcoin. So I'll pass it over to you to lay out your thoughts, and I'll add on towards the end.
All right. So I unfortunately did not watch the entire hearing before the committee, so I'm basing my comments on the context that our audience is also seeing. But that did appear to be fairly contentious, and the legislators seem to be alluding to the fact that the U.S. Treasury Department may potentially be using U.S. tax dollars to purchase Bitcoin or other cryptocurrency assets. It did not seem clear that Scott Bessent wanted to affirm or confirm that the U.S. government will, in fact, be purchasing cryptocurrency, which I find peculiar, as it's standard policy of the administration that they are pro crypto. And it has even been said by President Trump, or Dunny T, that he wants America to become the cryptocurrency capital of the world. And it is also policy of the administration to create a strategic Bitcoin reserve. The only way to create a strategic Bitcoin reserve in the United States would be by utilizing taxpayer dollars. Texas has done it. There are other states who have strategic Bitcoin reserves, and how they are purchased is through taxpayer dollars. They are not privately funded. And yes, Scott Bessent is correct that the US government has seized Bitcoin holdings. I just looked it up quickly. In October 2025, the U.S. DOJ seized 127,271 Bitcoin in connection with a large fraud and money laundering ring, the largest BTC forfeiture in DOJ history. So 127,271 in October 2025. And so total known holdings vary by estimates, but they range from 198,000 all the way up to 326,588 Bitcoin. We do also need to remember that there was a significant amount of Bitcoin seized during the Silk Road fiascos.
Yep.
However, Ross Ulbricht has been
You may, if you're frozen for anybody else, but you froze for. Oh, you're back. You're back.
okay.
Yeah.
So, but it was also important that we not forget Ross Ulbricht was pardoned by the administration as well. So all of the Bitcoin that was seized during the Silk Road um, marketplace attack is also in the holdings of the U.S. government. So I'm very surprised that Scott Bessent decided to dance when he could have actually been forthcoming and transparent, as that is the administration's stance or their hope. I think by not being transparent and avoiding the question directly, it does create the sense that the administration is doing things below standard and par when it comes to cryptocurrency. I'm not sold on Trump Liberty Finance. I'm not sold on Eric Trump and his mining company. I do think that there is a blatant conflict of interest, and I know that's counterintuitive to my bags. And as a avid crypto investor, um, you would think having an administration that is pro crypto is in my benefit. However, I do think ethics are important when it comes to business. And I don't believe that this administration is the most ethical. And therefore, I do believe it is crime season, as I've said now 3 times on this show. And that, and Scott Bessent's words lead me to believe that even more so when you have a easy layup question and you are elusive.
Yeah. I would say you're right. One thing I would probably disagree with you is maybe the point of it being like an easy layup question. You're right with the states taking that route of buying using taxpayer dollars to buy Bitcoin. I would agree. I would say he can't commit either way. One, because he probably doesn't know what the Trump administration is going to push for, but also two, it's a very a risky move for the government to use taxpayer dollars to buy the assets. It makes more sense for them to seize it, steal it, confiscate it, and then hope for the price to go up. And you're definitely right about the underdealings and involvement, not just with World Liberty Financial and Trump uh, dealings in crypto, but pretty much the entire administration. I don't know specifically Scott Bessent's dealings with cryptocurrency, other than the fact that he's a big advocate for stablecoins being an avenue to fund the U.S. debt. But we can also talk about the Secretary of Commerce, his dealings with Tether. They're the ones who helped over the years pump the Bitcoin price through minting tethers, going back and buying Bitcoin. So it's from Trump pretty much the top down, a lot of involvement in crypto from that aspect. So it would probably not be a good look if the government were to buy a lot of cryptocurrency and to see them lose a bunch of money with the market fluctuations uh, and the volatility there. So I can understand that aspect of him not committing, because to me, for the federal government, it's not as easy as it may be for some states who have a smaller, obviously, budget, and then people who are advocating for it in different senates of the different states or houses of the different states around.
And I think it's important that we reference the actual executive order from the administration. I'm going to drop that into the chat here for you, just so we can pull that up really quickly, because that kind of flew under the radar. Now, here we are a year later. But it does explicitly state that it is the policy of the United States to establish a strategic Bitcoin reserve. It is in black and white. It is further the policy of the United States to establish a United States digital asset stockpile that can serve as a secure account for orderly and strategic management of the United States' other digital asset holdings. So they're openly admitting it's our policy to establish a Bitcoin reserve, and we have other digital asset holdings. But this is why he danced. And so now I understand based on the text. The Secretary of the Treasury shall establish an office to administer and maintain control of the custodial accounts, collectively known as the Strategic Bitcoin Reserve. But this is capitalized with all Bitcoin held by the Department of Treasury that was finally forfeited as part of criminal or civil asset forfeiture proceedings. So that does mean that the strategic Bitcoin reserve that Trump says he has built is wholly compiled of Bitcoin that they have seized
Yeah.
and obtained through criminal and civil proceedings. And it further goes on to state further down that they cannot actually utilize taxpayer dollars to purchase Bitcoin without further executive or legislative action. That's in Part C. However, the United States government shall not acquire additional stockpile assets other than in connection with criminal or civil asset forfeiture proceedings imposed by any agency without further executive or legislative actions. So, if he would have just transparently answered and said, yes, we have a reserve, it's made out of criminal and civil forfeiture assets that were seized, and we cannot purchase any cryptocurrencies without legislative or further executive action. And it's codified as the official policy of the United States. That's a firm, concrete answer, and that gets you out of any um, con- conflict that the Democrats wanted to bring about there. I do think that the law as written, or excuse me, the executive order, it's not a law, as written is fair, but I don't think people should necessarily think of a strategic Bitcoin reserve. I don't believe in let me say it this way. I'm not a fan of civil asset forfeiture laws in the United States. I do think those are wholly corrupt. And understanding that the US's codified strategic Bitcoin reserve is made up of assets that were retained in a corrupt system, then I don't think that's necessarily a good thing. But I do think it's a good thing that the door is opened for additional executive and or legislative action for the US to legally obtain Bitcoin versus taking someone's Bitcoin that may have actually obtained it legally and you just decided they were a criminal or they committed fraud and you were stealing it and it's yours now.
Yeah, yeah. A lot of smoke and mirrors, and and it's like you said, not it's right there. He could have given that straight up answer, like, "Hey, look, read the document. This is what it says." But that's not what they're about. I think they're about causing a little bit of confusion, keeping people guessing, antagonizing the opposition.
It
And I
gets the
think they
people.
love, yeah, they love that little back and forth as well. Yeah,
Absolutely. It makes the news, that the legislator gets to go back and say, I made Scott Besant dance. He had to jump around. I made him squirm in his seat a little bit. When in all actuality, the executive order says what it says. And all, bro, go read the document. And I went on to
I'll
the
trip
next
it.
question. Yeah, like
Yeah.
what are we talking about here? So
So
I'm glad we got to break that down though
yeah, thanks for
for
that.
the crypto warriors and crypto rascals because um, there is this sentiment that is anti-crypto in sort of common culture today. I saw a reaction to the Coinbase Super Bowl commercial with a group of friends who were sitting around singing the NSYNC song. It was karaoke to get people engaged, and then at the end of the commercial, it flashed Coinbase as who was actually sponsoring the commercial and the ad, and then the whole room went from singing the karaoke to booing, and someone commented, that's the state of crypto today and how people's sentiment are towards it. Um, but I think people need to um, have a sobering moment, read the text, understand that your taxpayer dollars aren't being misallocated. They're taking stolen crypto and misallocating it. So it's actually crime season that's happening right now. And you yourselves have your representatives kowtowing and dancing on the stage for theatrics, but the real adults in the room are doing what's necessary to ensure that the markets are
Yeah.
here for cycles to come.
How about that Bad Bunny? I just made it back in time for the halftime show, and I was getting my little salsa on.
I don't want to get in trouble since we haven't even talked about the prices yet, but I really enjoyed Bad Bunny's performance. I thought the energy was there. Obviously, my
It was fun.
Spanish isn't the best, but hey, bruh had the vibes. I thought it was rocking. I thought it was, authentic. I did have a major problem, but I can't say it, and so I'm just gonna keep that point to myself. It's
I'll tell you.
actually,
I'll tell you offline. A funny thing. Yeah.
actually, I'm just gonna say it. Um, was there not one Latina or one Hispanic female artist in the diaspora who could have used the look other than um, the non-Latina,
You didn't like Stephanie? You didn't
non-Hispanic?
like seeing Stephanie up there?
I I thought that was the definition of cosplaying and inauthenticity, and I think it speaks to why systems don't change and how things stay the same. Let's just,
I guess. Yeah, we can leave it at that.
yeah. I had to keep it as clean as I could.
All right, let's talk. Let's talk about some
Let's
prices,
go to the
and
prices.
maybe we can
Wait,
talk. We'll talk a bit about Bitcoin and what Scott Besant said. Does it help hurt Bitcoin and whatnot? Okay, Jams, I got it pulled up on the weekly view. The prices from the block.co cryptocurrency prices just broken down week over week. We got Bitcoin here, obviously in the top spot as always, down 10%. But yeah, run through this real quick. I'll add some commentary as you go through. We can just maybe hit the top 10 pretty quickly. I did read a story. I did drop a little article about Bitcoin and potentially the price intertwined with metals. Michael Burry, he was talking about how depending on what we see with the prices of gold and silver, that pullback, Bitcoin could have room to drop just because it seems like those two markets are intertwined. with investors, and obviously impacting the mining companies as well. Also, the digital asset treasuries who've been buying Bitcoin, they're potentially losing money. Their economic, or just say their business model is not, let's say, sustainable, depending on the price of Bitcoin and how it impacts that. So overall, a week over week down 10%. It does seem like people are starting to turn a little bit bearish on the price of Bitcoin. Um, Maybe dropping down to the 40s or so, but you hear different stories about maybe this is the bottom. But anyway, you can run through these and let us know what you think overall about Bitcoin and some of these other top 10 prices.
Awesome. So looking at our top 10 prices for the day, Bitcoin is coming in at $68,633, down 10.5% on the week. Bitcoin had significant sell pressure last week, and actually saw lows around 60, 61, 62,000. Had a nice recovery, as you can see there in the middle of the chart, um, but now has been trading sideways, in that 68 to $71,000 range. So price still sliding, significantly over the last 7 days. Market volatility remains elevated in cryptocurrency as a whole. So this drawdown is much different than 2022 or previous cycles, where there were big catastrophic implosions such as FTX or other exchanges going down. In long term, analysts are still very bullish. We saw Bernstein come in with a $150,000 price prediction, and target for the months ahead. And then Michael Saylor and MicroStrategy continues to reaffirm and buy Bitcoin. I will also admit I continue to reaffirm and dollar cost average and buy Bitcoin on red days such as today, as I do believe long term, this volatility, we will look back and not be concerned at all. So the Bitcoin reserve personally continues, to grow, but nothing we say here is financial advice. Just two brothers saying things publicly that we otherwise could say privately. In our number two spot, Ethereum, trading at 2010 per coin, down 11.5%. Also correlating alongside Bitcoin in its trajectory. Um, Really need to see some excitement in the Ethereum space. Basically, you can watch ETF inflows and outflows to determine what the price of Ethereum is going to do. Um, Trading right around that 1950 to 2100 range. We'll see what happens over the next few weeks. Some analysts are saying that we have not seen true capitulation. We have seen Vitalik Buterin begin to sell, but as a whole, I think it's important that Ethereum will, be here long term. There's too much DeFi activity, and we have seen some leave the ecosystem as far as stakers go. But other than that, it'll be here. Long term volatility. It's at a discount. Buy when cheap. Something that which was big news today, was Goldman Sachs announced its position in cryptocurrency. So for those who um, are wondering, what are the big institutions doing right now, while the headlines are saying sell Bitcoin, people are booing Super Bowl commercials. Nobody's asking you about your cryptocurrency bags. Red, 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 red. Um, Goldman Sachs recently publicly disclosed its cryptocurrency related holdings, showing large exposure, especially to Bitcoin. Total cryptocurrency reported 2.36 billion in its Q4 2025 13F SEC filing. So 1.1 billion in Bitcoin, 1 billion in Ethereum ETF exposure. So that's why I mentioned the Ethereum inflows of ETFs driving price. You have Goldman Sachs admitting they have $1 billion in official SEC filings. And then we get to XRP, which we were just about to speak about. They admit owning 153 million in XRP and 108 million in Solana. So the disclosures are mostly through spot crypto ETFs, not direct token holdings on its balance sheet. So institutions such as Goldman Sachs are definitely here. They're getting their exposure through ETFs. So if you're looking for a signal on price, it's probably best to watch those ETF inflows and outflows. Won't go too much deeper into altcoins, as I really just wanted to hit that you have a key signal in Goldman Sachs, the world's largest investment bank, admitting that they do have blue chip holdings and that they are exposed to ETFs primarily. And all of these coins are basically trading alongside Bitcoin. But there was one new coin that I learned about actually today, and it is Layer Zero. So Layer Zero had very, very big news today. Citadel Securities backs Layer Zero in new blockchain effort. So you're like, oh man, another new blockchain. However, ARK Invest, Citadel partner with Google Cloud and DTCC. Uh, Financial institutions are warming to tokenization and on-chain settlement, but they're limited by scale, speed, and coordination. And Layer Zero is saying we're going to be able to give you 2 million transactions per second for 24/7 on-chain settlement and markets. And Asherel, I know we are early to coins, and then we like blow it off because I'm like, oh man, that's just another layer two. I'm not doing that this time. It's at $2. I bought $2 today, so I'm not playing that game this time. I'm I'm putting my money where my research is, and I found it today. And go ahead and look it up and look at price.
Yeah, I'll check layer zero out. When you
Yeah,
see the
I was gonna show the people out there, what the price looked like today. Price today it is up 20% on the day. Oh, excuse me. Yeah, up 20% on the day, up 46% on the month. So sometimes follow the smart money. Um, Everything is down significantly today. However, Layer Zero is up. If I were to name drop a couple others, Helium Network, I'm paying attention to buying at these low prices. Undo, real world assets, over 2 billion in total value locked. Um, and then Meteora on Solana is knocking it out the park with fees. So right now I am really focused on stacking as much Bitcoin as I can during these dips, um, staking as much Solana as I can during these dips, nibbling into Ondo, nibbling into Layer Zero now, nibbling into Helium, potentially Met, Meteora, and of course, got to stay on the chain link because at the end of the day, everybody needs prices. Oracles will drive the day, and interoperability is the name of the game. So, those are our prices. Those are some altcoins for you. That's what I
yeah
got.
interoperability, that seems a key word as these big players get involved. DTCC being a big clearinghouse, trillions of dollars. So I know they're utilizing the Canton network and others at their disposal. So it'll be interesting to see which ones they choose. And as those big companies with trillions of dollars, kind of how they decide to structure and utilize blockchain for settlements to go alongside their their business models. I know we didn't touch too much on the different altcoins, and I did mention this last week too, and I'll talk a little bit about Jeff Dorman and the research and his team over at the um, r.ca, what they do, and kind of what we're trying to do here as well is thinking about the different, we call them altcoins, but I think as crypto grows and companies are starting to find, you could say, real world use cases for blockchain and cryptocurrency, trying to figure out ways to talk about these different cryptocurrencies and trying to categorize them in a way that makes sense to people out there as well. So I'm going to bring up this article from Jeff Dorman. He's recently, I discovered him. I think he has a Canadian company, but he's a big proponent about one, bringing education to the space and allowing people who aren't as into this space, maybe people who are investors or people who are traditional institutions and legacy finance system, giving them a way to understand the different sectors of crypto. Well, we obviously take a look sometimes at the mind share in the different sectors and how which sector is top of mind for people, whether it comes to price action or what are people thinking about and where are things headed. But he offers in one of his articles recently a way to think about ways to get defensive. We just took a look at prices and saw things are trending with Bitcoin being down. But let me pull it up here. Jeff talks about thinking through like defensive sectors in crypto and like rethinking that. He has other articles talking about how we should view cryptocurrencies and the different use cases of tokens. Some tokens offer you with opportunity to stake them and earn more of that token. Different platforms offer the ability they'll buy back the token from you with the hopes of driving up the price, causing deflation, taking supply of that particular token out of circulation with the hopes of like increasing the price. There are other tokens that offer a way for people to participate in a particular protocol through voting and deciding how that protocol moves and what the different business decisions that are made. So in this article, I encourage y'all to go check out his blog, and he'll have a weekly blog where he'll break down the different digital asset subsectors. He breaks it down into cryptocurrencies, smart contract platforms, decentralized finance, centralized exchanges, as well as gaming, meme coins, and AI. So from his week over week perspective, this is about a week old, this particular article. Things were down week over week and year to date. But he just talks about for those and traditional investors, maybe, and people who have been following the different tokens that aren't Bitcoin or Ethereum, some of the main ones, ways maybe to think about a defensive strategy and deciding what sectors to, as people would say, maybe diversify into that could hedge against the downturns, bigger downturns in the market. We're going to take a look. We talked a little bit about Hyperliquid over the past few weeks in different streams. I did mention the Canton coin and that Canton network and their partnership with the DTCC and trying to provide those big institutional clearinghouses and banks a way to have a blockchain that is where they can settle and offers privacy as well. And then he also talked about Pump.fun. That is, we've talked about that one as well over the past few streams as well. But what he kind of talks about, if you wanted to dive deeper, and we'll take a look over at DeFi Llama if we have some time here, just looking through and looking when you're doing your research, looking at the different tokens that you have. And yes, people are expecting price action, but some of the different tokens offer different use cases and different, let's just say, like just different, let me scroll down to what I was going to find here. Different token rights, the word I'm looking for. He highlighted here Hyperliquid. Hyperliquid is a trading platform that offers people the opportunity to get exposure to perpetuals. But people who hold this token if you go to DeFi Llama, it gives you a breakdown of the, you could say, quote unquote token rights that you would get from having this particular token in your wallet. One, it would give you governance, share of revenue, and like I mentioned, buybacks. They don't offer dividends or anything like that, but it does give you the right to limited rights to, you can vote on upgrades, treasury decisions, and other network parameters as well. So I do one of the call out some of the things that we label altcoins. They're not one and the same depending on what token you have, the platform you're utilizing, if you're a trader or somebody who's just interested in a particular industry. For example, you mentioned helium, which gives you the ability to, I think, utilize that for telecommunications. There's others that give you access to satellites and different technology around, let's just say, tracking, the ability for self-driving cars, managing data through satellites. So his article kind of wants to reframe how we looked at the different altcoins and then think about it from a defensive stance as far as, yes, you may have access and invest in some of those other protocols that are more talked about and more common, that have ETFs and big institutional players investing in them. But there are different tokens out there, thousands, that you can research and kind of sift through, and as you look and see the ones that are most utilized kind of rise to the top, and you can decide and see what actually you get from utilizing a particular protocol or having a particular token in your wallet.
I really, really like this research that you've done, and I'm glad that you're bringing this source or resource um, up or servicing it for the crypto rascals and warriors, because I could not agree more with the assessment that Hyperliquid is a cryptocurrency that all cryptocurrencies should have exposure to. I actually just transparently bought 3 Hyperliquid tokens today to add to my bag long term, because this is another that I think everyone should be dollar cost averaging this cycle during the bear lows, as I do think you will see Hyperliquid in the top 10. It's doing more volume than Coinbase already, and it's all on chain. Then you add perpetuals to it. I see no way that Hyperliquid doesn't take off. So shout out Jeff Dorman. Arca's doing some good research. I agree. The only thing that once again muddies the water, Pump Fund. I've had my meme coin season, but after some deep research into Pump Fund, I learned where they're based. I learned who they're owned by. I learned who they're beholden to. And once others can go do their own research and understand why the meme coin frenzy and Pump Fund was the source of such craziness at the peak of Solana meme coin season. As I do feel the markets were being infiltrated by Fry. I don't want to say their real name. I can't say their real name.
Fair enough. I had heard it said that Pump.Fund is just the first iteration of like democratizing capital raising, So it's like the first iteration, of something like that, where regular people are able to raise funds. And I know they have a streaming system over there, tying it back to, I guess, value bring or attention that you get through through streaming. So it's probably more to come in that realm and seeing how it evolves with other copycats and whatnot. But Pumped Up Fun seems to be like one of those early yeah, one of those early pro- products projects, what you might call it, where it's a peek into what the attention economy is going to become for a lot of us here, and whether that's people who are 24/7 streamers or content creators out there as well, like ourselves. So
100%. So what else you got for me, man?
all right, I got a couple more things here. Let's just take a quick look at Masari. I did mention we did talk a little bit about sectors. Masari just provides a way to obviously look at a lot of different assets. They offer a lot of good insights and research, but I'd like to look at their signals tracker sector breakdown, where you can see on the month what are people thinking about, how is price moving, what price is moving, what are the different moves being made in the blockchain ecosystem when it comes to DeFi and networks, what are the different partnerships, new launches, and things like that are causing their mind share to show networks being down 7%, but taking up 29, 3, close to 30% of the overall mind share when it comes to cryptocurrency. DeFi is up. I wanted to touch on why DeFi is up here and read what they say. The DeFi sector is experiencing a significant uplift driven by the January 29th, 2026 launch of the ERC 8004 trustless agent standard on Ethereum, accumulating over 41,000 registrations and gaining BNB chain support, alongside on-chain options trading volume reaching an all-time high of 44 million in early February as participants seek higher yields. So, further fueling this expansion, we see our favorite World Liberty Financials USD1 stablecoin is surging by 191% on Solana, becoming its fastest growing DeFi asset, while decentralized exchanges are increasing their share. That part is cut off. Their share are increasing their share of perpetual trading volume from 5% to 12%. So I think into 2026, we'll as we go on through this year, a lot of the themes we'll continually touch on leading the blockchain cryptocurrency space are perpetual trading platforms, stable coins, and then different things that have to do with decentralized finance. Probably the aspect of the part of the ecosystem that allows people to custody their own coins in their own wallet and interact with some of those protocols that are kind of, you can plug in, let the protocol or algorithm do its thing, whether that's maybe staking, lending, or things of that nature. But I would say probably from what I've seen a month or so into this year is stable coins, perpetual trading platforms taking up a big share of the activity, not just probably in this particular instance in this snapshot of sectors, but just the overall space. And that does tie back to some of the fluctuations we've seen in the gold and the gold and commodities market with silver as well.
I really like this heat map. It's probably one of my favorite charts that we've shown in the history of the show because it does emphasize how much the markets have evolved. We're not just talking about a layer one like Bitcoin. We are talking about decentralized finance versus centralized finance. We're talking blockchain infrastructure versus meme coins. You have NFTs versus DePIN. And so each one of the sectors or industries are areas where you can drill into. And something that I just noticed, which I didn't really notice before, is that they're signaling both mind share, which means activity, attention, mentions, comments um, on social media, as well as market cap. So you're able to not only see people's awareness or attentive or activity surrounding each particular sector, but you're also able to see how that is reflected in price. And so I'm glad you drilled into DeFi there. We were able to see that. And I'm going to spend some time looking there as well. And I'm glad you mentioned uh, World Liberty Financial, as I did see a story today that Binance custodies 89% of Trump family linked stablecoin USD1. Um, and so, just a quick rundown on that. Binance custodies an overwhelming 89% of the USD1. Liquidity follows user demand, and we work hard to meet demand and serve our users, says Jessica Jung, the PR rep at Binance. It does not mean that Binance owns the coin. However, no other major stablecoin has such a high proportion parked on a single third party exchange. So it is an anomaly. And they say that their involvement with World Liberty Financial and its related products is limited to standard listing, infrastructure, and market services. And then critics come back and say that this is all a result to the $2 billion investment deal between Binance and Abu Dhabi's MGX to Trump's
Yeah,
presidential pardon for the exchange's co-founder CZ. And so the statement that um, crime season is upon us seems to be being confirmed in real time, with Trump's stablecoin surging 50% in the week while the rest of the market goes down. So just want everyone to understand, there this is crap season. So
yeah, for sure. Well said. Well, appreciate y'all. Thanks for checking us out tonight. That's it from us, and hopefully we'll be back next Tuesday to offer some more insights. And as Jams labels it, follow